Good morning, everybody. ¿Cómo allez-vous? Nice to meet you. Namaste, Daniel. You know. Hey, good morning, Kitty Kelly. Kitty Callahan. How am I? I'm sort of, I'm a neither here nor there mood today. All right, so let me the disclaimer. Yeah, good day for a webinar. Absolutely. Beautiful call on the pound dollar yesterday. Oh, cool. Right on. Hope you made money. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So Mike B enjoyed that trade. Ryan enjoyed the trade. Cool. Hi, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client. We appreciate you. I'm here every single day for you to help with technical and fundamental analysis. And I've also been through a lot over the many years of trading my own account, trading other people's account, being regulated, all that kind of stuff, starting funds, working with investors, all that kind of stuff. So I'm here to answer questions and help in any particular way I can, even if it's trader psychology stuff. I've made every mistake ever, so I can tell you how to avoid them. I'm highly qualified in making mistakes. Can't be ashamed of your mistakes, that's for sure. Anyways, I do these sessions Monday through Friday here at Forex.Today, 7:30 in the morning, New York time. It's a couple of hours before the stock market opens, but it's also approximately London lunch. A great time for us to meet as a community of Forex traders. First Friday of the month is this week. Typically, the first Friday of the month is not the first day of the month. But typically, the first Friday of the month, I also do trade non-farm payrolls live, and I believe it's month 140 that I've been doing that. Could be wrong, but I think it's month 140. That's a lot of months. Don't you go anywhere. Okay, Katie. Yeah, 140 months. That's a long time, huh? Like, should I have a goal for this thing? Or should I just kind of do it no goal? Should it, like, what's the goal? 150, 200, 500? Yeah. Thousand, yeah. All right, cool. Let's just start, I don't know, I guess here, right? This is Kiwi yen. This is where we left off yesterday. Somebody asked a question about Kiwi yen. I think there was a big bottom going back like a year or something, right? This is the right, I don't know, tip of a giant double bottom. See, Brook, that was quick, Brook. Here's a higher high. Here's a higher low. So, are these things predictable? This is a 4-hour chart. Well, before you and I met, you might have felt that that kind of a move was unpredictable. First of all, look how fast it fell. Why did it stop here? Why did it triple bottom? Why did it break out? But why did it stop? Okay. This is interesting because that's where a bull would buy using the swing trading strategy that I teach, right? And the target for the bull is here. That's where the bull should stop trading. And that could be where bears get back in. Now, if you are a bull and you want to get back in, because I'm assuming you're out here because that's what that's all about, the way you get back in is typically a role reversal, right? Because you're trading it like a breakout. And the breakout says, let it break out, let it return to the scene of the crime, and maybe, just maybe, you launch to the next level. Who knows, right? But notice that over here, it's sort of like ghost town. It's all crickets and tumbleweeds, right? You're like, it's hard to really predict any of these moves. And then if you overlay some colors, right, like pivot points, all of a sudden you're like, damn, this ain't a random walk at all. Look at this breakout, pull back to the central, right? All of a sudden you're like, that's not random at all. That's you maturing as a trader to suddenly see stuff like that, right? Like it's not random. Okay. I'm trying to make that a straight line. Okay. So bears are thinking what? Lower low, lower high, lower low, lower high, lower low, lower high, lower low. Do you think a bear is going to try this eventually? What do you think? Predict the future. Yeah, I think they would. That's the pattern. It's called a trend. Even if they're wrong. See, we don't know if they're wrong. So this is where you have to start folding multiple things into your trade plans, right? Where you look at something like, well, I guess I'll leave it there. It could still do this, couldn't it? Even if you're a bull. In fact, you should always plan for the slow way around. If you had to choose between the market falling and then rising versus the market falling and double bottom and rising, go with the second one. I'd almost assume it heads up and then down and then up and then down if I'm a bull. Okay. Bears see this and say, all right, great, we'll take some profit, we'll sell it up here, and then we'll break these stupid bulls. So if you think about both sides of the coin, if you think about the bulls and the bears, it really helps with your support and resistance. Okay. So if you were going to trade it, how would you trade it? Let it break out, let it pull back, let it head up, and that's your day trade, right? Wouldn't this be today's trade up into here? And then what? It would look a lot like this trade. It would look a lot like this trade, right? That kind of stuff, right? What I worry about is traders that make this their career. Okay. So you should be very cognizant if you find yourself always buying in a downtrend or always selling in an uptrend. And for some reason, it's easier for traders to do. It's a really strange psychology, right? I don't know if you've noticed that in your trading, but I've noticed over, the last 15 years of helping other traders, very often I find that most people seem to be doing this for some reason. Standing in front of a freight train. So anyways, if you were a bear, I would really be setting this trade up now. Makes sense, doesn't it? When I draw it out with the arrows, doesn't it make sense? Well, so Brendan says, so what if my bias is bullish? Yeah. Well, that's what I'm saying. So on the smaller time frames, it's doing this. You should assume it's going to come down one more time. And then you should start asking yourself, when is it confirmed in your mind? Now. Think about it now. When is it confirmed that it's gone from bearish to bullish in your mind? A break above here, a break above here, a break above here, a break above here. Okay? Ryan says a higher high, but remember, if you change the time frame to a daily, what's probably happening is still this, right? That's why this is here. So you could be right until Friday and then wrong all next week, right? Because a much simpler pattern is happening here. On the higher time frame, they're just looking for a little Fibonacci retracement. So if you're day trading, you can get yourself all busy in here, right? You can get all busy. Busy. What'd you do today? I bought it. And then the next day it falls. What'd you do again? I bought it again. And then it falls. And what'd you do today? Oh, I bought it. Right? And you had a busy week. The funny thing is your busy week could just be a small, slight retracement to a larger trader who wasn't even in the office the 3 or 4 days you're trading. And all of a sudden you trade it up and then they sell it and they go back to doing what they were doing, right? Your year-end review. What did you do this year? I sold it here, and here. So anyways, I got this all highlighted just with the idea that on a bigger scale, like a daily chart, somebody's simply looking at this bigger move as a 382. Okay. Who asked about the bullish point of view? All right. Brandon. It was Brandon. So that's where this comes in. And let me get this a little better. Okay. So now you got to ask yourself, well, what is it that you're looking for? A 5-8 cross into a 21 is dangerous. Okay. You might get something like this, but let's use this past performance. How do you feel about buying this 5-8 cross into a falling 21? Okay, we can see it goes up. Imagine you couldn't see it. I call them hard pips. But look at here. At least you have a triple bottom. At least there's like a wedgie going on or something, right? So there's something going on, but still, is it predictable to say, oh, we'll take the 5-8 cross north? No. A triple bottom trend, change of trend, yeah, but you know what the easiest part is? It broke, it came back, to the old role reversal. So at the very least, this thing could kind of do this if you're going to be a bull. Okay? And if you are a bull, boy, there's your bottom. And how beautiful is that? Because we know that's a double bottom. And that means this should go at least to the top of the range, which on a daily chart, is a minimum of this, right? So you're buying at 77 and you're going for 84 or 83, 600-700 pips. Not a bad day. That's right. That's why you drop into the smaller time frames, because that's a tactical entry. How do you actually pull the trigger, right? But let me ask you, do you want to buy here? No. Why not? Resistance defined by what? 21 EMA? Yeah. And even more importantly than that is the role reversal. Thank you, Stone. Yeah. Okay. So a bull would probably still love to kind of buy this double bottom of a double bottom, right? And then load again here. And you need to say, well, this is going to break. Eventually, we're going to come back and test this, and this will hold, but you're a bull, so you know it's going to fail, but it will hold at least on the short term. Notice how that's a 55, so that's even telling me that we come down and we triple bottom, right? That's kind of what it's telling me, that not only if you're a bull is it going to go up, it'll probably do this, come down, do this, come down, and then start working its way north. Which gives us, like, that could be the entire month of December, right? Yeah, James says it right, yeah. So Alan says, Wayne, this morning's points are excellent. I see myself making these, miscues often. What parameters do you consider confirmation of a trend change? Well, a good point of that is in the price action course at FX Bootcamp. This idea that higher highs simply don't belong in a downtrend. But what time frame are we talking about, right? So you're going to see a change of trend, COT. You're going to see a change in trend on a 15-minute first. And then it's going to need to happen on an hourly. And then it's going to need to happen on a 4-hour. And sometimes these are kind of together. The 1 and the 4, or the 1 and the 15 could be the same. Then it's going to repeat it on the 4 and even the daily. Right? And they each have their turns. So even though you got a 1-hour change of trend up, if it's been in a downtrend and you're working your way up again, even if you've been up for 4 days in a row because of the 1-hour chart, you still have to assume you're going to come down on the daily and then work your way up there and do the change of trend on the 4-hour. And eventually you'll have all 4 time frames all going up now instead of all going down and turning. And that's when, by definition, you have a trend, right? The daily's up and you're riding the daily 5 EMA, and everything is good and right in the world. When you're riding a daily 5, Yeah, it's fractal geometry, Alan. Fractal. So another one I think in the basic training course, I do something called um, is it advanced forex trading strategies, where I do fractal geometry and chaos theory. I think that's what it's called. Did that like 10 years ago or something. It's nice because I did that one on stage. Oh yeah, that's right, the butterfly effect. Yeah, I did that right around the time I launched my book, which was kind of interesting because I remember showing somebody or showing up. I had the slide in the presentation at one point. So I'm in Vegas. There's like 1,000 people in the room, and I'm like, "Hey, I wrote a book, Strategic and Tactical Forex Trading. Here it is on Amazon right now. Here's the screenshot. It's the #1 selling Forex book on Amazon.com. And as you can see here, and I had a screenshot of the of Amazon, which is really cool. So it showed #1 selling Forex book, but it wasn't available for another week, right? So like people are buying it. Lots of people are buying it, and it will ship in 7 days. Like, I mean, it's like a baby, right? You feel so proud. Like, here's my book, my first book ever. It's #1 selling book, and it's not even out yet, right? It's like your mother-in-law showing up to your house, like, we're here to see the baby. I'm like, baby's still in the oven, honey. I haven't even taken her to the hospital yet. Yeah, well, we're going to camp out front. Cool. Would you like some wine? Can I call you mom? So, yeah. Yeah. But it was our first date. Isn't this premature? I don't even know if I like her. I don't like the curtains. All right. Huge tracts of land. All right. But I don't like her. What do you mean you don't like her? Anybody know what I'm talking about? It's Monty Python, by the way. Quest for the Holy Grail. Whoa, whoa, whoa. I don't think they said he was gay. Whoa, whoa, whoa. He's just a late bloomer. All right. One day, son, all of this will be yours. What? The curtains? Yeah, it misses a lot of people. But anyways. All right. Okay. Move on. Let's get serious now. What is this? Here's the pig dog. So we were talking pig dog, and was this sort of the plan that we had yesterday? Yeah. Wipe out other people's buttons. I fought in your general direction. Yeah, cool. So that was a trade plan yesterday, right? So, yeah, where's my cigars, bro? Mm-hmm. Where's my whiskey? Where's my wine? Come on. All right, cool. So, go ahead. Buy yourself a yellow Lamborghini with the license plate that says Wayne on the back. Did I trade it? No, I didn't trade yesterday. No. Yeah. No. Ooh, ooh, ooh. I'm cooking some other things, but I'm also, a college student. I'm a simple man. So anyways, cool, right? Now, on the weekly scale, I may have also mentioned you got to be careful because this prints a S1R1 week, doesn't it? Yeah, John. Yeah, not an easy one to catch. But that's why it's sort of like that's what a trade plan is per se. I mean, obviously not just entering with limit orders, but it is a way. But to have been there waiting, right? Isn't that what it really is all about? That you're spending most of your time looking at charts, identifying buy zones, and waiting. If most of your trade, if most of what you do is trading, you're not doing it correctly. Right? You know what I mean? So if you've analyzed things and you put in here, you could, yes, you could have had a working order here, put a stop somewhere, 50 pips away. It's all pretty basic, but it's when you're making decisions on the fly that things get dangerous. That's all, right? Or even if, let's say we call it untradeable. Okay, let's just call it untradeable. The pattern itself has its own validity. The fact that it did it with high velocity in this case, okay, fine. We'll say it's untradeable because of the velocity of the change. But the thing is, it's the pattern, like the way that I could casually talk about it on Monday. And remember going through the calendar? And I'm like, oh yeah, so you want to start trading pound, it's going to move, right? Remember that? Yeah, it's going to move on Tuesday. We got that. We know it's going to move on Tuesday. So you start trading on Monday. Where are your buy zones? Where are your sell zones? Pretty casual stuff. Then we look at it like, yeah, well, it'll probably fall. It'll probably hit and support either here or here, and then work its way back up. So we can casually talk about it, meaning casually, I mean like with logic and intelligence, and say, well, under these market conditions, we could expect some basics here. The basics is it's coming off the top. It's going to retrace back into a cluster of pivots. We're going to call that support. We still believe there's going to be some weakness in the dollar. We know there's going to be movement in the pound. So, if you can pick it up down here, it may go back up. That's the casual conversation in a nutshell, right? The 42-second version. So the velocity of it is, okay, news came out, great, very difficult, fine. But the fact that we can talk about the pattern, where the support is, where the resistance is, for you to set up trade plans, I think is much more valuable than the individual trade, right? Now let's talk about this. Is there an opportunity to get back in later? If you miss the move, what does Wayne teach you? Right? Never, ever, ever, ever chase price. So if it's going up and up and up and up and it's moving fast and furiously, what does Wayne tell you? WWWD. What would Wayne do? Right? Let's do it off the top. Come on. There it is. Do it off the top. So where's the sweet spot? When the candles are skyrocketing, what are you humming to yourself? No, it's not a pivot. 382 to 618. Thank you, Stone. Thank you for sharing, Stone. Stone's like, oh, heard it all, dude. You edit the Sharon. Thanks for sharing, Stone. You had to see it. All right. So anyways, there's a sweet spot move in there. Again, not saying that you should have had it, but it could have been a trade plan faux show. Okay. Can we call this, oops, can we call this a 618 based on this low and this high? Is that reasonable to call that a 618 in your opinion? Boom, 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 boom. Okay. What does a 618 predict? What's the target? 1382. Now, you and I have different storylines. Okay? We have different storylines. I taught you, or maybe someone else taught you, you might have read a book, whatever, all this kind of stuff. Maybe you went to a conference and somebody taught you. Did you know I spoke at the first Forex Trading Expo? I was a speaker. Like there wasn't a book, there wasn't a video, there wasn't an expert, there wasn't any information that I could find in, you know, I mean, this is like Barnes and Noble's kind of time frame. Can you imagine how long ago that was? Right? I went to Barnes and Noble's looking for information on how to trade. Like, oh my God, right? And there wasn't anything there, so I went to the Stanford bookstore on campus. I went to the campus, went to the bookstore, went to the economics area, and I bought a textbook because I couldn't find any information. So anyways, nobody taught me Fibonacci, and you notice, or you may have noticed, that I draw my Fibonacci study upside down. It's because I'm self-taught. There wasn't a manual. You got like a trading account, and they had some studies, like on a rune oscillator. I still don't know what the hell that is, and why would I even need it, right? An awesome oscillator. What the hell is that, right? But so you had to like just like play with things, right? So anyways, after observation, and I mean careful observation for a very, very long time, I came up with little rules like, well, if it fell this far, it would go here. And I swear to you, I swear, there was nothing that would taught me that. It's just through observation. There was no manual that came with a trading account that said, oh, by the way, your trading account has over 100 technical indicators. Here's all the information about each one. You're just like, there you go for it, go! Right? This was before MT4. This was before trading accounts had charts. So it's just really interesting. So I always smile and chuckle like, yeah, look, still 1382. Like, if you looked at 1,000 of these, wouldn't you say, well, it seems to me it has, you know, a reasonable propensity to extend to about that area and take a break, right? So anyways, there it is. So we could talk about it Monday. I understand the velocity and volatility, all that makes it difficult, but it is tradable. Okay, so like news, typically you would trade on like a 5-minute chart. Oops, I can't get back that far. Let's have to turn, nope, let's see. Gotta turn that off. Okay. Very difficult to catch, right? So you'll see me, if I'm trading high volatility areas, I'll move this, right? I probably would have had it like this. Yeah. Okay, pre-news. Then it goes higher, I keep moving it. Okay. That might have been a catch. Moves higher, moves higher, moves higher, I keep moving it, moves higher, bearish. Now that is scary. Okay. You notice actually, if you measure it this way, it's a 786. Okay. But off of what? A pivot. Whatever. Okay. Whatever. What if? Cool, right? Let's see. Euro. I think we had this coming down to here, didn't we? Trading the weekly move down and then trading it maybe back up. Now, if you're a bull, I would get ready right here, right now to turn the ship around. Okay? You got to get ready if you're a bull. What are you going to do? What you going to do? Got a pocket full of pips, and my homeboys do too. Okay? This is where you need to turn the ship, guys, if you're a bull. If not, it's a long ways down. Okay? So what's the plan, guys? Any bulls? Well, the most important thing, Ryan, is that you decide. Okay? So if you're going to trade this bottom of this bottom, because it's a cluster of two pivots, then at least you know where your stop is, right? So if your stop was there, take the shot. Okay? Okay? Does this say it's going to fall further? No. Okay? Boom, 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 boom. So I do things like this. I'll drag lines across. La, 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 la. So one thought is like, if this is so bearish and we got such a, right? What are we doing up above these lines? Excuse me. I need to go to a warm tropical place. Thank you. Like Singapore, maybe? Yeah. That's what I need. Un momento. Okay. Okay. Does it look bullish yet? No, I think what it Singapore is what, about 25 degrees Celsius right now? 27, 28 maybe? That's beautiful. Gorgeous. And Daniel, I heard Raffles is shutting down for a year. They're shutting it down in 2 weeks. So like, I gotta get there, man. I gotta get there. Otherwise I have to wait another year. Yeah, no, all trade plans start on a hard time frame. I get it. Look, you're gonna buy a cluster, you got the cycle, you got the role reversal, you got, so you're either gonna do it or you're not gonna do it. Get it. Fine. Now we're on a 1 minute chart. Are you gonna buy it here and put a stop? Or not? So what is this? 15 pips. Whoa! Woo-hoo-hoo-hoo! What is a role reversal? J-Dog asks. It's coming back to the scene of the crime. So down, 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 up, up. Old support becomes resistance. Sell. Down, 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 up, up. Old support becomes resistance. Sell. So on and so forth. See if there's other examples. All of these, right? Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, up, sell. But what I'm talking about is, so this is straight out of the price action course, right? So you see this low here, drag that across, new sell zone. This low here, drag that across, new sell zone. So when you're down here, you're looking left for your new sell zone. New low, look left, drag it across, not quite, but generally came back, right? Then our true breakout, okay? Another big move, look left. It's not quite there, but it was a big move, okay? Same sort of thing. New low, high, old support becomes resistance, sell, new low, look left, retracement, sell, new low, look left. So when you're looking left, we call these role reversals, where support becomes resistance or resistance becomes support. Well, you have to train yourself when you're walking to the store, when you're taking a shower, when you're driving in the car, you hum a little tune, or and it goes something like this: up, 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 down, down, buy, up, 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 down, down, buy, 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 up, 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 down, 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 out, down, 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 up, up, sell, down, 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 up, sell. It's like walking around with the basketball. You should just be bouncing that basketball all day, all night, bouncing. Okay. You'll notice that doesn't work if you don't have a trend. Right. Yeah. Okay, and we're looking at it here on a 1-minute chart. Let's see if anything changes. Let's go to an hourly chart. Okay, so we'll call this a double bottom, right? Breakout, pull back, look left, okay? Up, 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 down, down, buy. Up, 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 down, down. So this will be a future price in which you may consider buying, okay? So you can buy the double bottom, higher high, 1, 2, 3, roll reversal, higher high, 1, 2, 3, roll reversal, higher high, 1, 2, 3, roll reversal. You keep doing that until you do one of these. And then you go, right? You throw Macaulay Culkin at it. Okay? So it sucks if you don't have a clear trend. But you may be playing it like a trend. Higher high, higher low, higher high. Okay? So let's do this. I don't even know what pair this is. So we're just grabbing a random pair. Up, 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 down, down, roll reversal, pretty close. Higher high, higher low, roll reversal. 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 Right, higher high, lower low, roll reversal. Bit of a failure, right? Higher high, higher low, roll reversal. Again, sort of a failure. This is all failure of trend. Back into the support. This is all failure, essentially, right? You're, go to a daily chart. What is this? Euro dollar, huh? That's silly. Even this, like if you want to consider it this way. Oops. Support, resistance, right? I mean, some of it actually comes up here. So someone might even be trading this like a breakout, retracement, in this way again. Boom, 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 boom. Hello? Boom, 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 boom. Hello? Boom, boom, do, do, do. Hello? Okay, gold coming down off of the pivot cluster. Scary for bears, or bulls, I should say, right? Monthly R1, weekly R1. What did we learn? It's resistance on multiple time frames. Okay. Do you remember last week? What does that mean? How do we describe that with words? Less and less buyers. Thank you. Yeah, I know it's divergence, but most people say they talk about it as an abstract. What does it mean is different, right? And so the answer I was looking for is exactly what Stone said. Less and less buyers. There's no bears per se, but bulls are taking their profit. Okay. Okay. Robert says bulls will buy back. Well, depends on how you're analyzing it, right? So this is a subjective thing. Do you have it like this? Then yeah, maybe. Okay. I have this here in case there's a role reversal coming. So it just really depends on how you draw it up, right? Typically, if your R is your top, the S is the bottom. But whatever. Right, just put it all in perspective. Where's my mouse? Cool. Shut up, you fart knocker. All right, here we go. How are you going to trade this? Okay. Ooh la la. Swing trader entry. Right? This move, these lines here indicate that the downtrend had been broken, the one that we traded for 3 weeks or something. This is the break of that. Here's the double bottom of that, right? All that kind of stuff. But look at the Monday morning swing traders. If they bought that, and that's the exact price that you would look for as a bullish swing trader. I'm not saying that there's something here to predict that. There are things that give you permission to be a bull. So if you are a bull, see, that's where it always comes down to. If you are already a bull, then on Monday morning, you are on your hands and knees praying for this price right here. That's at the point in which it's fairly easy. Okay? Yeah, and that's the trickiest part, though, right, John, that we're in between the trend. We know that the downtrend has slowed down because of this. So then it gets tricky. So I'm not saying like, oh my God, see, it's going up. You should have known that. I try to always avoid that. The point in trading is that while you're sleeping, you know what you want to do. If you don't already know what you want to do, you're not an expert. You're a market participant, but you may not be an expert because you're winging it. You're like, I don't really know what's going on here, but, you know, my Arun oscillator is going to tell me. Right? So, but imagine this now. You on Monday morning, right? Monday morning, you're getting new charts and you're thinking, WM2, 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 WM2. And it opens just above WM2. What do you do? Right? Right? That, I mean, so that is it. If you are a bull, you got paid. And that's what I've been trying to teach you. If the market agrees with you, you get paid. If the market doesn't agree with you, you either lose a little bit of money or you never get an entry. So what if the vast majority of your career is you don't get your trade entry as you wanted, or you lose a little bit of money? What if that was the vast majority of your entire year? You either don't get a trade or you lose a little bit of money. Yeah, John says, well, then you would do good because the only thing left is the trades you do let run are fairly decent trades. They're big. They're bigger trades. So if all you had was a bunch of losses and a bunch of missed trades and a few big winners, you're like, right now you're gangsta. Right now you're wearing fur coats in July. Boom! Right? You got diamonds in your rum and coke. Yeah. Don't drink them though. Right. Psychologically it doesn't feel that way. So that's why you need to train yourself. Absolutely. So like one of the arguments I had is, what if all you did was swing trading? That's one of the reasons I created the swing trading course. There are times in the year which you'll probably do better than other times of the year. But like a weekly swing, like look, that's just weekly. Where's my mouse? I guess my mouse is dying. I need a new battery. Guess I need a new battery, huh? What's going on? All right, cool. Look, this is a swing trade buy. This is a swing trade sell. This is a swing trade buy. And that's not even with a bias. You're like, oh, well, it's opening low at the buy zone. Guess bulls are going to buy it this week. And this one, oh, it's opening higher at the sell zone. I guess bears are going to sell for the week. Oh, it's opening low at the buy zone, so I guess bulls are going to, right? So on and so forth. One of my friends is long used to against the Hungarian franc. Is he crazy? What the hell is wrong with him? The foreign, sorry, I didn't know. What the hell's wrong with your friend? It's ridiculous. You need new friends. Come on, MRC. You know, I don't know. Sorry, man. I've never even been to Hungary, which is really sad because I know Budapest, for example, is awesome, right? So I'm sorry, man. I just don't know. But if the Fed is thinning the balance sheet and squeezing people out of the bond market, you know, is dollar really going to be strong? Okay, Artem says, Wayne, if there are big winners but a lot of small losses that are taking, you mean like taking out all the profit? Yeah. I would have to look. I would have to look at your trading, right? It could be a risk management issue. It could be sort of a profit kind of taking area. Maybe it's some over trading. And also you might be unfairly judging yourself based on a fairly unsatisfying October and November. You know. Also, I could look at your trades and find out that you just have too many strategies going on, right? So so in our current conversation here, I'm like, well, what if all you did was swing trade? That might be something for you because now at least you can do a couple of things. You can do weekly swing trades. You can do monthly swing trades. Hell, you can do daily swing trades or even yearly swing trades, right? No, well, anyways, weekly swing trades, and monthly swing trades, and just really focus your particular trading strategy, right? So one of the pieces of advice I often give is you get really, 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 really good at one strategy. And once you've really built confidence and expertise in that one thing, like trading a double bottom with a higher high or a double top with a lower low, what if all you did that was for a year? You'd get better at identifying them. You get better at seeing them form, so anticipating them. You get better on your entries, so maybe you start entering on a 1 minute instead of 15 minute, right? You get better stop loss placement. You get better at risk management as you move the stop. You get better at predicting, the profit taking zones, whether you're using pivots or psych levels or really, the traditional measurement of, the distance between the high and the low predicts the next move, whatever. You start to get really good with that. And then over time, because you're starting to get good and because you're tracking your stats, you develop this confidence because you just assume you're going to make money now when you make those trades. Because you're so good at it and that's all you do over and over and over again, and most of the time you end up making money. So you develop confidence out of true skill. And you're a little bit shocked when you don't make money. You're like, what the hell is that, right? Good. So when you get there, that might take a year. So for example, I traded the 1 minute chart for a year so I could get confident in the 1 minute chart. So what if all you did was that one pattern for a year and you develop real skill, and from that real skill you get confidence? And of course, if you're only trading that one pattern, you're spending most of your time waiting for the pattern to develop. So now you have patience and discipline, right? So maybe in year 2, you do a new thing and develop a second strategy, right? So 3-4 years from now, there are 3 or 4 setups that you look for, and you're really good at these things, right? You're like a dairy farmer, right? You wake up in the morning, you got a bucket and a stool and some cows. You're gonna get milk, right? Same thing, you're just like, I'm gonna get some pips today because it's what I do. I'm a dairy farmer, I get milk. That's what I do. Yeah. But it's not like he's also doing options trading on the side. He's doing some eBay stuff. He's in an MLM program in South Africa where everyone puts in $1 and somehow you get 30 cents from 5,000 people. Now you're rich. Yeah. Right? No. He wakes up in the morning, milk. More milk than he can possibly use. Yeah. So he trades it for his yellow Lamborghini, right? Great. So anyways, what if you did that with swing trading? I mean, so it could be that too. I think it was Artem saying, what do I do if, yeah, well, obviously you have too many losers, or your losers are not small enough, or your winners are not big enough. So where is the mediocrity? Maybe there's something you're doing within the aggregate of all your trades that is leading to drawing down your returns. You know what I mean? So you really got to understand what your trading is. So you might find, is there a certain setup that is not producing results for you? Is scalping not working for you? Is news trading not working for you? Is swing trading not working for you? Do you lose money on Mondays? Do you lose money on Fridays? Where are these losses coming from? What could you cut out? Because very often you could just stop trading one thing and your profits go up 30%, right? So that you might be at this, because you've been around enough, Artem, too, where you might just need to have a business planning retreat with yourself and really go through all your trades for 2017. And where does the mediocrity come from? So you're like, well, you got a bunch of losses and you have some big winners, but there's still not a lot of profit. Well, is it because your profits aren't big enough, or is it because you have too many losers? And if so, why? And is there any pattern there that you can identify? What could you cut out? Or was it a sideways year? Except for some big things like Brexit and a few others, right? Did you miss September? For example, I set you up 6 months in advance, told you the third week, right? Now, pound yen went up 2,000 pips. So what did you make? 5,000, 10,000 pips? How many pips? Yeah. All right. So September was good. Did you throw it all away in October? Yeah. All right. So so you don't have to answer me, but if you've been around enough where you should really have a business planning retreat with yourself. Spend 4 or 5 days going through your trades and planning 2018. What are you going to do for 2018? There's a simple question, right? What are you going to take out of your trading? Where does the mediocrity lie? How are you going to know? Go through your trades. It's true, James, right? So if you let the winners run and then pay the penalty for, when go through the charts, when should you have listened to the technicals? Right? So for example, next year or the next 10 years, do you remember how, and I'm not even looking at this, so I'm talking and I'm looking at you, right? September, we drove it into the pivot profit zone. There is a rule, right? You should take profit in there. And then maybe we can get back in October or November. Sometimes we ignore that rule, but at our own peril. That is additional risk because when you're in the pivot profit zone, it's supposed to come back. Well, in this case, it came all the way back. So what's better? Do you say, well, do you let it come back 618 and then bail? But why would you bail at the 618? That's a buy zone, not a bail zone. So maybe you should have taken profit at the profit zone and then dealt with the rally later. Or in this case, we were trying to build portfolios and stuff. Maybe you should have 2 accounts, one for building portfolios, one for daily, weekly trades, one for longer terms, right? And split it out, right? What can you learn? And that's really what it is. I feel like we've gone long again. No, I guess we're about where we're supposed to be. So I'll see you tomorrow. I hope to see you. Yeah, James is right. It's definitely a game of probabilities. Well, just remind yourself the most basic elements of what we do. Look at the market. Is it trending or not? That tells you immediately what you should be doing. If you can't figure that out, then no trade plan you come up with is going to be worth its hill of beans, right? So you have to answer the basic question. Is it going up? Is it going down? Or is it going sideways? Very, very simple. If it's going up, you're buying dips. If it's going down, you're selling rallies. And if it's something in between, right? So start there. And then tiptoe in deeper into the weeds, like a 15-minute chart, 5-minute chart, so on and so forth. That's what I mean. You should be able to do this while you're sleeping, in the sense that if you already know or anticipate direction, the rest is fairly easy. How about range trading? Well, assume the bottom's going to hold, assume the top's going to hold, and never trade in the middle of the range. No matter how awesome your oscillator is, no matter how awesome your moving average crossover is, that's no man's land and you're going to get shot. right? And you don't care if it's Turkish bullets or British bullets, you shouldn't be in no man's land. It's all the same, right? Hey, is this Gallipoli? Yeah, lead salad. So, yeah, so stay in the trenches, right? So there's support, there's resistance, and there is nothing else. And support and resistance will hold until there's a break. And then there's an obvious thing to do after that, trade the role reversal after the break. Yeah. And you know, that's why the training courses are there too. It's amazing. You can watch the video, you know, once a year. And even on year 5 or 6, now you're like, yeah, that's totally true. That's totally true. I need to do a better job of that. It's totally true. And, you know, even though it might end up 5 years from now, it'd be like, you know, relearning your ABCs. But it's amazing how quickly we break basic rules and kind of twist and change things. Yeah, Alan, fxbootcamp.com. Sure. Yeah, no worry. So anyways, whatever. Peace on earth. May the pips be with you. May your profits be above average. See you tomorrow. Thank you for being on my team. I appreciate you. If you like these webinars, show your loyalty and respect by opening an account at TradersWay.com. Throw your diamonds in the sky. Thank you.